So that's the big story for today. To talk more on it, we have with us Utsav Verma, who's the head of research at Choice Institutional Equities, joining in with his quick take. Utsav, hi. Thank you very much for taking the time out. Well, just wanted to start talking about the path to profitability for Meesho now. You are expecting it to turn EBITDA positive by FY27. That's the estimate. Just take us through what that is predicated on. And what are you expecting in terms of an EBITDA?
Hi, thank you, Ekta, for having me. Yes, you're right. We are predicting Meesho to be profitable in FY27. Right. So what we believe that Meesho's improving unit economics and scale advantages underpin a strong monetization runway and a clear path to profitability. The platform itself, it commands 29 to 31% of India's e-commerce print volumes, with NMV expected to grow at 31%. Now, we have seen that it supports category leadership in fashion, home, kids, wear, and BPC segment. So their acquisition cost continues to decline. Contribution margin is expanding from 2.9% in FY23 to 5% in FY25, and we expect it to reach 5.8%. So logistics leverage through Valmo, fulfillment cost compression, and stable take rates, that is around 30 to 31%, will strengthen cost profitability visibility. So we are very confident that Meesho is on track for EBITDA break-even in FY27 and with operating leverage accelerating thereafter.
Okay. So, Utsav, do you think a lot of it is already priced in? 60% listing pop. What kind of valuations is it trading at? And would you think one should still buy at these levels?
Yeah, so that's the question on everybody's mind. In fact, we came out with a note only today morning, and our target price is 200. That is, and the upper band was 111. So we expect about 81% from the upper band. The stock may be trading close to 174 odd or so. So what we did, we tried a number of approaches to find out how should we value a company like Meesho. So first set of peer group is, of course, the likes of companies which are Swiggy's and Eternals of the world, who have pan-India scales and have comparable B2C platform. Second, we compared it with some of the other companies, platform companies, but their business model may be different, say B2B business model, or companies like, say, Urban Company or ArtTrade. Now, when we look at their EBITDA margin and road to profitability and compare it with EV to revenue multiple, we feel that there is substantial headroom, because if we look at FY28 numbers, Meesho is still at 2.4 times EV revenue, whereas when we look at the median or mean of these companies, they will be trading at 4.8 to 5.4 times X. So there is sufficient headroom, we believe, which is there. Additionally, we also looked at when were these companies became or planning to become EBITDA positive, and whether or not they are a cash flow CFO positive or not. With that premise, when we look at it, even at that front, Meesho is just at 5.3 at IPO listing, whereas some of the other companies were at much higher multiple. So we believe there is sufficient upside that is still remaining, and our target price, as I said, is 200 that we have come out with a note today.
Right. Utsav, 200, it's already 170 now. So yes, you would still say that someone should look at it today also if they're looking to buy to reach the 200. And what do you think now from here on will be the main growth lever for the company? Obviously, they are in that value segment, tier 2, tier 3 city focus. They have that larger reach. But from here on, what is the growth driver?
So essentially, it's so I believe IPO for Meesho is just the beginning of the large story that is unfolding in India. First and foremost, we have to look at the entire retail business that's there in India. That unorganized is 21%, right? And organized is just 21%, which is going to grow to 34% or so in the next 4 to 5 years. which means a $500 billion opportunity. Now, e-commerce is going to kind of take the bulk of it. And when we look at it, the next 15, 20 crore customers are going to come from this value e-commerce platform. And further, they are going to come from tier 2 and tier 3 cities. So fundamentally and structurally, the new wave of commerce is going to be value commerce, and it will be led by sellers and customers in tier 2, tier 3. And Meesho sits really very comfortably in that Goldilocks situation, along with a tech platform, which is basically driving them through to profitability in very significant and accelerated manner.
Okay. All right, Utsav, thank you so much for joining in with your insights and the outlook on this particular name. A big listing pop is what we've seen today. We'll see which way things go for this stock from here on. We'll slip into a short break. Up next, we'll connect with Vikram Bupala of Nephro Plus. Their 353 crore rupee IPO opens today. Stay tuned for that conversation.
Six years of CNBC-TV18.